Hello, my dear family. Welcome to my YouTube channel. How are you doing? Hope you are okay. Please, if you are coming across my channel for the first time, don't forget to subscribe, like, share, and comment. Thank you. In today's video, I'm going to be talking more on the users of accounting information. Users of accounting information are those who actually need accounting information. In today's video, we are going to go detailedly those who need that information and what do they need this accounting information for. We will start with the first group. We have the external users. The external users of accounting information include the creditor, the debtor, the investors, the regulatory agencies. We have the debtors. Debtors are those who have bought goods from the enterprise. That is, those who the enterprise have sold goods to them on credit. So they are actually owing the enterprise and they are supposed to repay their debt. So when the enterprise have prepared their results, the debtors are a group of people who buy things from the enterprise on credit. That is, the enterprise sells to them on credit, and they are supposed to pay the what they are owing the enterprise. So they will obviously try to see if this enterprise is reliable. Can we trust this enterprise? Are they selling these goods to us at a good price? Are they not cheating us? So they will always try to see the accounting records. They'll always try to know the financial statements and how they are keeping their records and how the record looks like. Then we have the next group of people, which are known as the creditors. The creditors are those who sell to the enterprise. That is, those that the enterprise buy from them on credit. That means the enterprise is owing the creditors. As the enterprise is owing the creditors, those creditors will obviously need to see the accounting records. The first thing, they will need to see these records to know if this enterprise is reliable. This enterprise will be able to repay. They will try to see if this enterprise will be able to pay for the debts they are owing them. And they also need to see if the enterprise is not is not selling the product at a different price. For instance, if the creditor is the producer of that particular product and the creditor produces something like, let's say, a product and sell it at a cost of 500 to another enterprise, and that enterprise takes that same product and sells it maybe tripling the price, that is already exploiting the consumers, whereas they know that it is already more than the price. So the creditors will also need to see that to know if they are on the right track. Remember, the first reason is to know if the enterprise is trustworthy and to know its creditworthiness, if they can pay for the goods they bought on credit. And the next reason is to see if they are actually selling the product at a good price, not exploiting the consumers. Then we have the next group, which is known as the regulatory agencies. Under the regulatory agencies, we have the state. The state will obviously need the accounting information to see if this enterprise is preparing their records, it's keeping their records following the financial law, following the accounting principles, concepts, and so on. They will try to know if the enterprise is actually respecting those rules and regulations. And after that, the state will now come in to know exactly how much they are going to charge the enterprise as tax for them to pay. Then we have the auditors. Auditors will always come in to check if the enterprise is preparing the records following the concepts and principles. If they are not doing that, they will tell them that this is where you are getting it wrong, you are not preparing it correctly. And to also see if the accountants, the bookkeepers and so on, they are not manipulating their business owners. They are not stealing their business owners. They are not manipulating the figures. They are not playing with figures. So the auditors are going to come in to check. And they'll also try to rectify errors. They'll come to see if the accountants, the bookkeeper and so on, that's the person who is in charge of keeping records, is not committing some genuine errors. So the auditors are there for that. Then we also have the investors. We have normal investors, just people who want to invest in that business. They'll always try to know if this business is making a profit, if what we are about to put in is going to yield them profit. They should not go and invest in a business that is about to go bankrupt and be expecting something. That business will actually crumble and their investment will go like that. So they'll always try to see if the business they're about to invest in is going to yield them profit. Okay, we have the bank. Bank is also another investor. The bank may want to give out credit to a business to run that business and repay the money. So they will need to see the creditworthiness of this business. They will need to see how the business is functioning. They will need to see how the business owners have planned, they have forecasted on how the business is going to run, and they will trust the business. They are going to see their past financial statements to see if the business is making a profit or a loss. That is to an already existing business. But for a business that is new, that they want the bank to fund the business, they are going to actually go through the business plan and see their budget. If this budget they are going to, this budget they have prepared is going to actually help them. These are some of the external users of accounting information. Please watch my next video to look for the other users, that is the internal users of accounting information. Thank you, and don't forget to subscribe, share, like and comment. I love you.